I am buy rated. I remain buy rated. We upgraded the stock in January at around 330 a share. Our price target's 420 on the stock.
Okay. The questions that I've been asking, and that is that, you got Comcast with, what is it, 120 billion in revenue, and you've got this company with 20 billion.
Yep.
And not entirely different market caps. One was 170, 165 before today, Netflix, and the other just has been going higher, Comcast, but or Disney. They're both around Disney's well above 200 billion, but that doesn't set off any alarms. That there's a $30 billion market cap difference and a five-fold difference in revenue.
Well, one is growing 25%, and while I don't cover Disney and Comcast, I believe they're growing in the low single digits. One of those is expanding.
Low single digits.
One of them is expanding margins 300 basis points plus a year, and have said they think they could do that for multiple years.
But Netflix was 30 billion a couple years ago, and the future was kind of clear for what was going to happen. And the future, as bullishly as it was portrayed, is not, now that we know the actual numbers. And in this country, it didn't match up to that narrative, did it?
Well, I would say a couple of years ago, you didn't know that they would likely be the leader in this category. I think investors today have a greater level of confidence that this is the category leader over the next couple of years. I don't want to discount Disney, right, and I don't cover it.
In streaming, you mean?
Yes, I think it's streaming.
So, okay, everybody's going to have a streaming service, so they're going to be that much better at developing content than everyone else?
I think, number one, there's scale in terms of number of subscribers. So we could be talking here about 250 to 300 million subscribers. Disney's likely going to be the most competitive threat over the next couple of years, but that's starting from 0 in November, and we still don't know what the content slate's going to look like for Disney, though we do know pricing. So you have a fairly large lead here for Netflix.
So, Ed, I was kidding, but I was saying I was feeling pretty good about myself in Comcast earlier today, thinking, oh, okay, cord cutting, I'm going to be out, panhandling in a couple of years because of cord cutting. Same thing can happen there, but for the grace of God, go the streamers too. If things change,
well, it's interesting is that
they can get disrupted. They can get moved out by new
Netflix
entries.
Netflix is the established player now, right, in streaming. They've been for a while. They're still 60 million U.S. subscribers, so it's not a small number. So the total addressable market that Netflix sees, at least in the U.S., could be as high as 90 million, and they haven't changed that target. They think they could still get there. So despite the dip, they're still anticipating a bigger push. That dip, though, that loss of 126,000, that's sort of what cable companies have been seeing, right? Like that's what they've been seeing for quarter after quarter.
How much of this is a function, and Becky made a very smart point earlier about this, is a function of just price, meaning they'd raised the price. Right. How much of it is a function of what Reed Hastings said on the call, which was, you know what, we might have not had the right mix of shows, new shows to bring people in. We've talked a lot about whether millennials are binging shows, turning it off, coming back on when The Bodyguard comes back on, or The Crown, or whatever it is, and they didn't have some of those new programs.
So they were adamant last night that between gross additions, which is new ads to the platform, versus churn as a result of the price increase, that this was a gross addition problem in the quarter. They have already said July is much better than what they saw in May and June, and guided Q3 above the street in terms of subscribers, oddly enough, when Stranger Things 3 came back.
Right.
So I think they were fairly clear. Even our own work would tell you the credit card data was much better than the app download data. Now, maybe we should have put a greater weighting on the app download data because we didn't get the subscriber forecast right. Nobody did last night on the street in terms of what the miss versus their expectations. But they were fairly adamant this is a content problem. Now, that could lead to a bigger debate longer term about how you have to
I would say that's almost a much bigger concern. That means
that is a traditional TV programming
right.
is a challenge, period, right? So it's not just
welcome
what
to the
shows
new world,
you get,
same as the old world.
and when you put them on. I think that's the thing. I think I agree with Eric here. I think the company very much stressed that it was more of a programming issue of when things were available, and the things that they had available in the second quarter didn't quite hit the way that Stranger Things would.
Does that undermine, and I've made this argument before, the argument that you need a Friends or an Office, that all of the library program is not what keeps, or not even what keeps people on it, but definitely doesn't bring new subscribers on it?
Well, look, I think while Friends and The Office are watched a lot on Netflix, they would seem to be watched by people who are in their teenage years. We all watched the Friends in The Office when it was on television years ago.
That's true in our house.
And the controller of the account is someone who pays the credit card and it's me, not my 12-year-old son. So if my wife and I want to continue to watch Black Mirror and Stranger Things, that's more what causes churn as opposed to content coming off. It could be a consumption problem. You could see less consumption on the platform.
Although, look, Netflix must have thought these programs were worth something. They were paying $100 million plus to keep them on the platform. So they don't think it's, we don't need it.
So what's interesting, I think, in the case of the Office example, there was an auction for it, even though it's owned by NBC Universal. There's profit participations. They want to make sure everyone's getting paid properly. Netflix, they didn't win that auction. They $100 million a year is where NBC won. What does that tell you? Netflix doesn't think it's worth $100 million a year.